afternoon. Welcome back to ET. Now you're watching Market Fatafat with me, Kanishka Sarkar and Ankita Saxena. Over the next half an hour, we'll discuss all the top buzzers in trade today alongside fundamentals and technicals. But before that, a quick look at how the markets are shaping up. Well, it's a pretty good day coming in. 87 points of uptick on the Nifty right now. However, we have given up that 26,000 level for now, trading just about 4 points lower from there. On the Sensex, a good 290 points of uptick coming in over there. 84,968 is where Sensex is at. Bank Nifty yet slightly muted as far as compared to the other indices. Just about 0.1% gains coming in for the Bank Nifty at that 58,960 odd level. So yes, that's about the major indices. But if we talk about some of the top gainers that are contributing to the Nifty as far as those nearly 26,000 levels are concerned, it's HCL Tech, Max Healthcare, Infosys, Wipro, TCS, HUL, all of these contributing to healthy gains on the Nifty. Other than that, if you talk about some of the losers that are limiting the upside on the Nifty, it's Tata Motors, PV, Maruti Suzuki, NTPC, Bajaj Finance. So all of these are the top losers on the Nifty. But yes, let's get started talking about all the top buzzers in trade today, Ankita.
All right, for that, we are now joined by Jigar S. Patel, who's a Senior Manager Technical Research Analyst, Anand Rathi, Shares and Stocks Brokers, who's joining us. Hi, thank you so much, Jigar, for joining us. Good afternoon to you. And let's get going with all the stocks that are in focus today. The first up is, of course, Waaree Energies. That's tanking away in trade. That's trading with cuts of almost 4%. Now, remember, the news is that, the company has confirmed an IT probe at several of its office premises. In fact, company has told exchanges that the Income Tax Department had visited several of their facilities to conduct an investigation under Income Tax Act of 1961, and the proceedings are still underway. The company is extending full cooperation to the officials, though the report says the probe involved around 25 teams of Mumbai, Chikhli and Vapi, and the probe began at the 5.4 gigawatt solar cell gigafactory in Chikhli. And on the back of this IT raid that has taken place in Waaree Energies facilities, that stock is tanking away in trade with cuts of 4% right now.
Right, so that's Waaree Energies for you, tanking away in trade on the back of those income tax department visits that have been paid at those facilities. But next up, the stock that is in focus is Coromandel International. Jigar, you've picked out this one for us. Of course, this is in focus on the back of the US-India trade deal that is back in spotlight yet again. But what are the technicals looking like for this one?
First of all, very good afternoon. Overall, the structure of Coromandalam looks like, since last 3-4 days, we are seeing a very good momentum in the stock, and before that, there was a strong base creation exactly on 200-day exponential average as well as simple moving average. Overall, the even bullish divergence is seen on daily chart on MACD, which is short-term indicator as well as long-term indicator with different periods. But overall, the stock looks poised for upside till 2,350, 360 odd marks. So definitely we may see some more traction in the stock, and one may keep SL below 2200, and overall the target would be around 2350, 2360.
Targets to look at as far as Coromandel is concerned. But moving on to the next buzzer, that is KEC International, yet again in the spotlight today, under pressure. It's trading about actually 8% lower right now. This is the Power Grid has banned the company from bidding for new tenders for a period of at least 9 months. The Power Grid says that the action stems from an alleged breach of contractual terms, a matter that KEC had already disclosed to the exchanges on March 24th of this year. Now remember, this restriction does not impact the ongoing projects. If you take a look at what really triggered this, now the ban is linked to an alleged 2.5 lakh rupees bribe that was paid for favors in bill processing on Power Grid contracts. On March 24th, the exchanges sought clarification from KE after reports claimed that Power Grid GM and KEC executives were involved in this matter. So yes, but now KEC has said that they are exploring legal options and also engaging with Power Grid to understand if they can review the matter for now. It also maintains that it doesn't expect any material impact on the company thanks to its strong order book. So yes, that's KEC International tanking away in trade today yet again.
All right, moving on from KEC International to Hero Motor, that is in focus on the back of a note by JP Morgan that has upgraded the stock to an overweight with a target price of 6,850 rupees per share. Now, they have raised the target price, and this is a 17% upside from yesterday's closing. The target price increase is driven by EPS estimate revision, PE multiple expansion, the increasing FY27-28 EPS estimate by 6 to 8%, the increase in core PE multiple to 2 times from an 18 times earlier. The company's market share has also stabilized after several years of losses. The new launches plus the new inventory management is helping improve, positive outlook for the company. The management is also helping improve the valuation discounts is likely also to narrow down very soon. And on the back of that, they're maintaining an overweight call and also hike the target price on Hero Motor. It has given up those morning gains, but currently is trading in the green with gains of 0.8%.
Right, that's Hero Motor Corp gaining nearly 1% in trade today. But before we discuss Sena, well, let's get back to discussing all the top buzzers in trade today. And Jigar, let me come to you. You've picked out DMart for us. It is trading, it has lost about 6% in the month gone by. Do you think a reversal is now possible?
See, definitely, because the kind of correction we have seen from the top is very massive, and overall the current price action is exactly near the previous demand zone, or you can say support level of 2025 July and June, and as well as there are 3 to 4 different areas where we have seen DMart reversing from exactly 4,000 mark, and on this hourly chart again, see double bottom structure is seen overall, and there is a bull divergence as well. So I'm expecting at least 4,250, 300 levels within coming 3 to 4 sessions. So buy would be the recommendation in DMart, and stop loss would be below exactly 3950 on daily closing basis.
All right, so those are the levels to track for DMart or Avenue Supermarts, that is. But moving on to the next counter, that is Tata Motors. Now, this one is in the spotlight because Citi has resumed coverage on Tata Motors' passenger vehicle business, and it's coming with a sell rating. The brokerage has set a sum of the parts target price at 310 rupees. Yeah. This compares to a current market price of 372 rupees. Now, Citi says that JLR continues to face multiple challenges. EV positioning remains very uncertain. US tariffs are a key headwind as well, and China's luxury tax is squeezing profitability for the company. On top of that, the recent cyber incident could hurt Q3 performance as well. Now, in contrast, the India PV business is doing better, but competition, especially in SUVs and EVs, is intensifying, and hence Citi has sharply cut its FY26 estimates for JLR with smaller downward revisions for FY27 and 28. So the net view is Citi stays cautious, downside risk persists for Tata Motors PV, and hence the stock is also trading about 2.5% lower right now.
All right, so moving on then from Tata Motors passenger vehicles to Titagarh Rail, that is in focus on the back of a note by Nuvama. Now, Nuvama is maintaining a buy, though they have revised the target price to 1,088 rupees from an earlier 1,142 rupees. So they have downgraded the stock a bit. Then that is because so for quarter 2 FY26, they see a sharp 25% and 42% year-on-year decline in revenue and PAT respectively due to the wheel set shortages impacting the wagon production. The order inflows though stayed strong, supported by a 2,480 crores Mumbai Metro Line 5 win, driving the order book up to 15,000 odd crores. With weak wagon tendering, the FY26 and 27 estimated EPS has been cut to 20% and 18% respectively. They are maintaining a buy call with a strong long-term prospect with a revised target price, which is based on the valuation rollover to quarter 2 of FY28 estimate at 35 times EPS. On the back of that, Titagarh is in focus today. It has recovered sharply from the day's lowest point, currently trading with gains of 0.4%.
All right, so that's Titagarh Rail for you. But moving on to the next counter, Jigar, you've picked out ICICI Bank for us. It's trading about 0.5% higher, but in the past 6 months or so, it has given up, about 5%. But fundamentals, they are now turning positive for the bank. Do you think the technicals are also as strong right now?
See, recently we saw a decent bounce in ICICI Bank, and currently it is, since last 3-4 days, it has been consolidating exactly on 200-day exponential and simple moving average. But before that, the bottom, which was resisted on 7th November, so on daily chart again there was a bull divergence, and later on we saw this bounce, and Based on hourly chart, again, the kind of momentum which we are getting in since last 3-4 days is looking very positive for coming few sessions. So I would recommend ICICI Bank for a target of 13. Exactly around 1410 would be the target, and the stop loss would be somewhere near 1360 on daily closing basis.
Right, so that's ICICI Bank. 1410 is the target with the stop loss of 13 and 60. But yes, let's move on and get you updated on the next stock that's buzzing in trade today, and that is LG Electronics. It's because Morgan Stanley has come out with a note. It has initiated coverage on LG with an overweight rating and a target price of 1864 rupees. Now, they call LG a leading consumer durables player backed by strong brand, a premium product mix, and deep R&D support from the parent company. It has also highlighted industry-best margins, strong cash flows, and a solid return ratio. While the AC segment for the company may drag near-term, Morgan Stanley says that the long-term demand outlook, that remains robust. If you talk about some of the key growth drivers, new capacity expansion, rising exports, and a fast-growing B2B business, all of these are expected to fuel about 15% of revenue CAGR between FY26 and 28. MS is also pointing to LG's diverse revenue mix, which reduces dependence on any one particular category, and backward integration that also strengthens cost control. So yes, overall, a very bullish outlook as far as the long-term demand for LG is concerned. That's the view coming in from Morgan Stanley, and hence the stock is in focus today.
All right, moving on to the next counter that you picked out for us, Jigar. You picked out Eternal for us. Now, interestingly, the Eternal has been down almost 9% in the last 1 month. But yesterday we had a brokerage note by Morgan Stanley that says that they're overweight, and the target price that they've given sees a potential upside of 38% from Monday's closing. So do you concur? What are the levels to watch out for now?
See, currently we have seen a very decent correction in Eternal, almost 18 to 19% on daily chart, and overall the kind of structure which is seen on hourly chart, again there is a bull divergence near the levels are 300, 305, and currently we are getting momentum on hourly chart as well. So the buy would be the recommendation on Eternal. The stop loss would be below 300 closing on daily basis, and overall the target is expected near 322.
All right, so those are the levels to track for Eternal, but that's the last talk of the day. Thank you, Jigar, for joining us today, and on that note, we'll let you go. Thank you so much. Well, with that, we're completely timed out on this edition of Market Fatafat. Ankita and I will take your leave, but don't go anywhere. The closing trades coming up next.